Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today on Monday, February 28th with a Forex trading and cryptocurrency trading analysis for you. Before we get into the whole webinar, we want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. And also, if you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. Okay, so we got the live screen. Oops, sorry, got the web. Come on. Sorry about that, folks. Okay, so we have the Forex-Trading-Unlocked.com website pulled up for you here. And we are going to talk about all the chaos that's going on right now. One thing is for sure, the Forex markets had been trending nicely up until recently. The last couple of weeks have been a complete grind, and we're going to go through what is going on and try and make some sense of everything that's happening as well in the Forex community. So we have the workstation page already pulled up from our main menu. We're going to skip down past the numbers, and we're going to just take a look right here at what's going on with the Euro US dollar. Alright, as you can see, the Euro US dollar is not doing so well. It's been grinding around and chopping around in a $2 range for the last 3 sessions. It's really hard to get a beat on things. We had a nice positive reaction on Friday. It looked like this market was going to turn itself around. And then look at what happened. Obviously, the market opened really a lot lower. Yesterday evening, a lot lower. Yesterday evening, a lot lower. Definitely above the lows of the session, obviously, and we are hovering right around 2/3 of the range as we speak right now, around 112.09. Pretty significant, that 111 even area holding support. We did make a lower move low, so we will have to see how this impacts the trend. So right now, as you can see, we made the lower move low 2 sessions back. We almost fell through it again overnight into today's trade. Now take a look at this here. So we had come off of this, barely making a higher move high, and then we make a lower move low. So technically right now we would be heading into possibly a neutral trade, which is very likely possibly to occur for the next couple of weeks, unless there's a radical change in what's going on with the Ukraine, either for or against the attacks, meaning that either there's a withdrawal, a pullback by Russia, which does not seem to be happening anytime soon, or there's an escalation of what is happening already. So these are things that could definitely impact the Euro US dollar. Remember, the sanctions that they have imposed are reactive, not proactive. So will they do any good? Well, that's an interesting topic in and of itself, I guess. We're not going to get into that. So what we're trying to do is make some sense of what's going on here. So if you are a bear, now here's the thing, is volatility obviously is here. It's not going away. If you are a bear, I would look to sell rallies if you're not already in the market. If you're a bull, I would use a lot of caution here. I mean, the only thing that could really drive the Euro US dollar higher would be a collapsing dollar for other reasons, where the dollar was negative against most global currencies, if not all of them. What would precipitate such a thing? Well, these sanctions and the way inflation's going, and with the way oil is going also, there's possibly a way where that could happen. As we are no longer an exporter in the United States, the dollar is one of the big, there's the dollar and the euro, which are the 2 currencies of the oil market. So there's a tug of war between the 2 of them as far as which strengthens or weakens which currency. The edge we had before was that we were exporting oil, which gave us dollar strength when it came to oil. We don't have that anymore. We're no longer an exporter. We are an importer. We do not send any to Europe or to Japan, which we had been doing, and now we are no longer doing. So everyone's reliant on the Middle East and on Russia, even the United States. So that's the other thing, too, is that if we wanted to really do things, why are we buying oil from the Russians every single day still, since this incursion has begun? and even excuse me, since sanctions have been levied. So it's going to be a tough trade. I'll be very cautious on the intraday basis. Wait for a signal. I would wait for a rally. As far as you can see here, if you look at from the middle of November, this is when we fell through 115 even, which is set pretty much the high point of the range for the last 2.5 to 3 months. We barely popped through it. We failed. And then also we did fall through it on the bottom end of the range, and that failed also. We just made a slightly lower move low. And as you can see, we're bobbling on support. Now, if you look at where we're trading now, for the Euro US dollar, let's put this little horizontal line. See where this is? We're hovering right around the pivot point of support for this range. So is it likely that we'll see a bounce? Well, I would say it's probably more likely to see a little bit of a bounce over the next couple sessions. As far as how far can we go, I don't think you're going to get higher than this 0.618 Fibonacci retracement area. And even the 50% level, I think, could give this market a hard time. Somewhere in this area here, I believe, is where you're going to see the market gravitate towards. I don't see it lasting, though. Like I said, I see it falling off of that area, running out of gas. And if you look at this, this is also the consolidated part of most of the trading range where the Euro US dollar has been in for the last for the month of December, and also a bulk of the trading since then has also gravitated in between these two levels of 113.5 to 113 even, basically. If you have any questions about this, those of you out here, please feel free to ask them, and even about other currencies, and we'll get to those after the euro. But I want to be clear here when it comes to the Euro US dollar right now. We've had divergence, and we've had lots of trends that have been solid over the past couple of years that have been very favorable towards currency traders. Now, the one nice thing about currencies is that most markets only trend 30% of the time. Currencies actually tend to trend much, much greater than that. That's why currencies are a fantastic mechanism for traders. You get movement, you get trends. Where are we going now is going to be anybody's guess. The question is how stable are our relations going to remain with China, especially if they start to make a move on Taiwan. And that's something that we have to look forward to as well. Now, right now we're concentrating on Europe. So we know that the EU is reliant heavily on Russia. So without their commodities, especially energy commodities, Europe could be, they're not going back to the dark ages, but they're going to be very restricted on what they are going to be able to do, and it's going to, for sure, have a big impact on their economy besides the social structure of their society. Where will all this end? Who knows? The one thing is that you can be rest assured that we'll have lots of volatility. Right now, we don't have anything to spark a trend with the Euro US dollar, except for most likely selling rallies and looking for signs of weakness, meaning that even if the dollar is weak, the euro is going to be weaker versus the dollar, versus many other currencies as well. As the Ukraine situation escalates and Russia moves in further and further into the Ukraine, that's when you have to realize that the euro most likely will be under a lot more pressure, and for us to be trading back down towards, say, 109, 108 to 107.5 down in that area is not outside the realm of possibility. In fact, it's very likely that we will see those prices sometime in the second quarter. Now remember, first quarter ends today, so, or not today, in a month rather. Today was the last day of February. We have one more month to go, so for the first quarter. So now, are we going to hit those levels sometime in the next 4 weeks? It could happen, absolutely. Like I said, it depends on how quickly things manifest in the Ukraine, or do not manifest. So that's the biggest thing that we have to watch. But I would say be a bear here and look to sell rallies. All right, so now let's go to our next currency, British pound, US dollar. This is another one that opened really weak and then rallied very strong once again. It looks a lot like the euro as far as the last few sessions of trading. Now this one here has been trending lower. You can see here where we set this lower move low here back in December. We set a lower move high. Then we came off of this. We were trending lower off of this lower move high. I would maintain this high right here, and also these highs that we just recently hit are going to be very crucial as far as resistance moving forward. The trend, lower move lows, lower move highs, obviously is lower. It's bearish. Is it getting neutral? Now here's the thing is, one thing that the UK doesn't have to worry about is oil. They have resources. They're not relying on Russia, that's for sure. So as far as dollar strength and dollar weakness, since we are an importer and we're buying Russian oil, what does that tell you? That tells you that it's very likely that, especially since the UK is no longer part of the EU. So does a fledgling economy and problems in the EU affect the UK? Absolutely they do. However, the degree of severity to which it weighs on the UK is nominal. Okay, so that means that we're not going to expect to see, as the EU, for instance, and the euro dollar are going to most likely trend lower, and as they do, that doesn't mean that the pound US dollar will. Now, I'm not an overall big bull for the pound US dollar because the UK economy is still going to be impacted by this. The question is will it really sell off? And I don't think that that's going to occur. The only way I would see that you really have a big sell-off in the pound US dollar would be if we had something that really gave us dollar strength, a reason for dollar strength. What would that be? In the short run, I don't see anything that possibly could generate such a thing. So as far as the pound US dollar, I would look to wait for a signal. Overall, the trend and technically, it is still set up as a sell rally bearish market. Fundamental factors being what they are, I think that as the pound gains strength versus other currencies, and why don't we take a look at the British pound, euro. See how this is? This is trending higher. Now this is where your trade is at. You can see how this market opened lower today and it rallied in a big way after coming off of this recent lower move high. However, you could look at it this way, as here was a higher move high, higher move low, and now we are trending to make a higher move high, and this is not a lower move high in the grand scheme of things, but probably a lower move high before we come off this higher move low and then accelerate to the upside. So British pound versus the euro, if that shows you strength, then British pound, US dollar, you're going to see it firm up, especially as the euro right now is strong versus the dollar, so why wouldn't the pound US dollar be strong as well? Since the pound is stronger than the euro, obviously this momentum is carrying forth. So if we see follow through on this rally for the euro US dollar, this is big for you guys. So if you're trading the euro and you're already a bull, you know your risk is the recent lows from 2 sessions ago. You know we have a target area that we already figured out. And your biggest indicator is that if the pound euro is trending higher and the pound US dollar also is trending higher, then it is very likely that you will see the euro US dollar continue to follow through to the upside and pierce through resistance levels. Okay, so we've got a really good scenario locked in there on this triangle of currencies. And one of the reasons I lay this out like this is I always tell people when, or not only do I tell them, but when they ask me about this same question is, what is my favorite indicator, or what do I think are the best indicators? And I always say the best indicator for the markets is the markets themselves. They are the only thing that's not lagging. For the most part, they are in real time, versus where you have anything from averages to a bunch of other things. They are behind the curve. Okay, so the nice thing about using the markets as an indicator is that they may not be very, very clear sometimes. They may be very muddled. However, when you get a beat on them, those give you some of your strongest potentials when it comes to either being a bull or a bear. So definitely take it into consideration. And we're going to use this also as we spread through these other currencies as well. So pound US dollar, we're looking for that to continue to have a little bit of follow through the upside. Now let's take a look at the US dollar Swiss. Talk about Swiss cheese. Oh my goodness. This market here sold off in a big way. The question is it going to be bearish? Is it going to be bullish? Is it just a sideways trade? That's the question right there. Now you can see for over 6 months, sorry, I totally apologize for that. Over 6 months now, you've seen the US dollar Swiss trade in a very neutral sideways fashion. The range has basically been from 91 even up to 93.5, with the consolidation of 91.75 to 92.75 being the bulk of the trading, as you can see from this chart, and even from the last trading range of the last 3 to 5 sessions. Now, do we have a signal? Well, we kind of do-ish today. It was 1, 2, 3, 4, 5. Now, you could have, I would say, if we go with the pound and euro getting follow-through, then the expectation should also be similar for the US dollar Swiss, meaning that the US dollar Swiss should trend lower over the next, I would say, 1 to 5 sessions, depending. Now, are you going to get a big move? That's a good question. I think that if you look at what's happened today from the body of this whole candle right here, there's not much room to the downside. Now, let's see what we do have here. If you look at the high that was set just a few sessions, 2 sessions back, we had this little kind of spinning doji type of, little bit, not quite a doji, pattern here, which calls for a neutral activity. And then we have this bearish engulfing line that forms right here. Is this going to be something that's going to be a big sell signal? I would use caution. As you can see on this chart, some of your biggest days down, or vice versa to the upside, didn't continue to follow through in a big fashion. It's not like this trended lower and lower and lower and lower and at that velocity either. So this one, I would say, this is another indicator too for those of you that are either euro traders or even pound traders, that as the US dollar Swiss stays negative or towards the lower part of this trading range here, especially below 92 even, down to 91 even, then you should expect to see a lift in the euro US dollar and a lift in the British pound US dollar for the remainder of while that is happening in the US dollar Swiss. Okay, so once again, the US dollar Swiss here, it's had a very big negative day. If we see some follow through to the downside tomorrow, then I would expect to see follow through in the euro and the pound, and also vice versa. So if you see that the euro is up tomorrow and the pound is up tomorrow, then as a group of currencies versus the dollar and the EU and also the UK, just the European trade zone, then you'll probably see the bears press support again in the US dollar Swiss. Now, you got to remember though, we don't have much to go left because it's already trading at 91.69. The Swiss has had a bigger move relative to than the pound and the euro over the past few sessions. Now, is that going to continue? Odds are very likely that it is not going to continue. So, but I would look to if you're a bull, give it some time, wait for a buy signal, and if you're a bear, I would look to sell rallies. I think that's your best opportunity when it comes to US dollar Swiss. All right, we have no questions out there, but we have some viewers out there. If you want to, please put something up on the chat, ask away. And if you don't mind, like and share this video, and subscribe to our YouTube or Twitch channel, whichever medium you're watching as well. All right, so now let's go and talk about something else. Let's talk about the US dollar JPY. US dollar JPY here, this one here is, boy, talk about a grinding trade. Now, this one's a really hard read because up until the Ukrainian situation, oil was helping to lift the US dollar yen trade. Not because we were supplying Japan with oil, even though they're our allies, but the price of oil was stable. Plus, we have oil; they don't have oil. We are an importer again, but we do produce our own. So that right there helps to keep the trend in a bull mode for the US dollar yen. There are obviously other factors involved. Interest rates being another big play right there, that we know that is the Fed is most likely going to raise rates 3 times or 3/4 of a point at least in the next I would say 6 to 8 months, and there's still a possibility that they not only do it 3/4 of a point, that they do a couple other raises or do a total of a point or more over the course of the next 8 to 12 months. I think that we're being so reactive now that, and here's the problem, raising rates doesn't help curb inflation. All raising rates does is cause more inflation. So it's a myth that you hear in the media and from a lot of financial pundits that this is the thing to do, but that's the propaganda they put out so that people say, oh yeah, of course you raise rates to fight inflation. Well, let's do the math on that. As we raise rates, the cost of borrowing goes up. So the cost of lending for people goes up. Okay, so that means that, yeah, you'll be able to write off more on your taxes, but you're also paying more to the bank. Now, I'm not saying that banks and lenders aren't deserving of higher rates because the rates are too low to begin with. However, we should have been raising rates while times were good, and you cut rates when times are bad, because it spurs inflation and makes it harder for people to pay for things. As you raise interest rates, then the rates on credit cards go up. The rates on financial lending for businesses goes up. Also, you have the cost of carryover. For those of you that are not familiar with the cost of carryover, this affects the markets greatly. Cost of carryover has to do with raw commodities. Whether you're in the cash market or the futures market, it doesn't matter. All commodities typically are bought and sold through the use of credit. There's not just cash transfers for buying of commodities. So, and there's also storage. Okay, so now here's the thing is, when you're buying commodities on credit, you're paying a cost, okay? So the cost of buying for any commodity now is going up because rates are going up. So there's one little spark of inflation that's caused by interest rates, okay? Then you have what's called, delivery of these things, and then you have storage. When you have storage, also that is typically financed as well. So that means that when the purchaser delivers, the original owner of the commodities, they get paid, okay? But the purchaser is now paying more for those commodities than they would have prior, okay? So there's inflation there. Then to store it, excuse me, you have a higher cost as well because of the higher interest rates. That adds more to the cost of whatever commodity you can get. You obviously are getting the math, so you should be understanding that if costs go up, how is that curbing inflation? If the costs go up to the end buyer, who then produces something that then ultimately gets sold to a consumer or used by a consumer, that means that the cost of all these things goes up by default. So you can forget about all the other factors that are driving inflation. Raising interest rates is going to drive inflation even more. So now, will that help or hurt home values and in the real estate market? Well, that's a whole other topic. We're not going to get into it. But these are things you need to pay attention to. So while they're telling you on the news and all these financial economists, what have you, tell you that raising rates cuts inflation, that is 100% incorrect. It is not true whatsoever. The math does not add up. It never has. It is only a political financial play. Okay, so that's what they're using. So the reality is we've been getting really cheap credit for way too long, and the reason you have higher rates is because there's a cost that's associated with default. So the number of defaults now is going to go up exorbitantly as the cost of credit goes up, and your profitability factor for lenders and banks and such is going to go down during that whole thing. So just a little bit of an economics lesson there for you. This is something they don't like to discuss in economics classes because it goes against the the propaganda, but if you can draw all the supply and demand shifters and charts that you want, but these are facts. It's really simple. You know that when you add a cost along the way or several costs along the way, it does not make things cheaper. It just does not. It makes things more expensive. So enough of that. We're not on a rant here. We're just trying to explain this. But this interest rate factor is also playing into the US dollar yen trade. Okay, so now that we talked about interest rates going up, what does that mean? Well, the Bank of Japan, the BOJ, is not anytime soon planning on aggressively raising interest rates. Okay, we no matter what know that we are going to have at least 1, 2, or 3 raises within the next 6 months. Okay, that helps to support the bullish trend that the dollar is stronger than the yen just because of the interest rate factor. Then you throw in $100 oil and rising prices in oil, that also helps to support the bullish factor with the US dollar yen. So I'd be very cautious with this trade right now with what's going on. Interestingly enough, we topped out here at 116.35 back on in the beginning of the year on January the 4th. Okay, so 116.35. Then we went to 116.33. We actually made a lower high here. We didn't make a higher move high. We made a lower move high. However, we have been making consistently higher move lows over the course of this trade here. So what do we have here? Well, what we may have is a short-term corrective move forming. If you look at from October now to today, it's starting to look a lot more like a sideways range trade in the US dollar yen trade more than a bullish trend. Okay, so if we look at this from the middle of October through, we know support is right around 112.63. Resistance is definitely here around 116. Now I have a target level of 122 even in the US dollar Japanese yen. Does that mean we're going to hit it? Anything can happen, but I do believe that the fundamental factors when you get to interest rates, oil, and a couple other things help to support that trend. Doesn't mean we're not going to have a corrective sell-off. So let's take a look at what's happening here. We have this low here, and then we have that low right there. So we're going to make this a little bit of a support line here, okay? And then we'll even take one off of this low here and bring it up here. Now, this one off of this last major swing low to here, off of this low that happened 2 sessions ago. This is a pretty decent slope. It's a 45 degree pretty much. A 45 degree trend is usually a good slope, whether you're going up or down, to maintain a trend, okay? Now, when it gets really vertical, that's usually when you see like the market goes up, and then it comes right back down in a big way. Markets tend to go out like they go in. And the more steep the slope going up, typically the more steep the slope going back down, at least for a period of time. Okay, now what we do have here, interesting enough, is a possible head and shoulders forming. Okay, and I think that you can see this. If you're not familiar with head and shoulders out there, then I'm going to explain it after I get these one more letter pulled in here. Okay. All right. So, bear with me now. Okay, so if you look at this high here, so the market made this low, rallied up, made this high, pulled back, made a higher move low, and then boom, came up here, made a higher move high, made a higher move low, and now today, over the past 2 sessions, of Friday into today, you can see that the market failed to make a higher move high. Now, we haven't taken out this low, so the trend still is bullish, even though we're trading lower today, and you can see that we're off the lows, not too bad, in too bad of a way. So the key level is this 114.45. A failure from there would mean what? Well, I'll tell you what it means. For one, it would mean we're making a lower move low after a lower move high, which would be indicative of what? A bearish trend, at least a short-term bear trend. Okay, so I would say the overall long-term, immediate term, what have you, trend of this market is bullish, so we're looking at this as a corrective move. Now, remember we put this line from this low to this low first? This is our neckline. So we have a shoulder, we have a head, and then we have a shoulder. If this is a head and shoulders sell pattern, obviously we have to take out this neckline before we even take out this last low. So as soon as we take out this neckline here, and let's make it even a little clearer, let me make the color gray and also make it solid. Okay, so here's your neckline, this gray line right here. So and they're pretty much at the same point as this low. So when we take out this, here's what it means. It means that this is a head and shoulders. It confirms a short-term bearish trend. And then it also means that we're more likely to hit support for the next few sessions. Now, how far are we going to go? Well, this is pretty much a sideways trend. It's going higher, but it's only grinding higher. For the most part, you can see we've been in a sideways trade. Sideways trade between 112.75 basically and 116 even. Okay, so not that big of a range. You're talking about just over $3 in a market that can trend away very quickly to the upside or downside. Now, how far can we go to the downside? Well, that's a really, really good question. So let's just say that we do have an extreme sell-off. How far can we go? Well, let's take it up to here. So, irony of it all, look at what this. This is now how you know the market's trading harmonically as well. We take this last major low back here in the fall, and we go up to this high that we had right here back at the beginning of the year of 2022. Our 50% line falls right on this line. Remember when we started this spot on the US dollar yen? We drew this channel that was the lower part support, upper part resistance. Our 50% retracement falls right there. And then our 0.618 would be right here. So as far as where will this market come down to? Well, we know that besides that this has been a big support level and pivot area already, around 112.75, it also is 50% of this move from this low up to this high. So we have a Fibonacci level that confirms a very good support pivot area. We also have a visual from where the market traded and basically hugged the bottomed off of this level. So the question is, will it bounce? Will it get down to it? Well, if this head and shoulders is confirmed with a failure that follows through and takes out this neckline and takes out this low, it's very likely that we will get dropped down to 112.76. Now we're going to follow through even more. Very likely we could press down to 111.88. Will we go lower than that? Probably not, because of the fundamental factors. So I would view this as a technical sell-off correction that's going on in the US dollar yen, where we will be pressing support in the bottom part of this range, and I would view it also as another buying opportunity. So short term, we're aggressive bears. You know also that the high of today is now your risk level. If we violate this, and this is no longer a head and shoulders, it just means that we made a higher move high, we made a higher move low, and we are looking to challenge resistance and break out to the upside. So we do not have a head and shoulders yet. We have this forming. We have to take out this neckline and this low to confirm a sell signal. If that doesn't happen, well, then obviously we don't have a sell signal, right? Pretty elementary. So something to look out for. Definitely something to pay attention to. And as far as finding a trade that you can really follow in the short run versus the other ones that we spoke about, this is the only one that actually has a really good signal. Now, everyone has their buy and sell signals or indicators and what have you. Whatever you use is fine, I'm sure is fine and great for you, as long as that's what you like and what have you. But these are definitely adding up and lining up right now. It is definitely something you should be aware of. If it's not necessarily you'll be trading on the same side as the view that's being expressed here, but you should be aware of these risk levels, where if you're on the counter side of these areas, that's why I give you these levels. You protect yourself, manage your money, and your trading is the key to success. If you hold on to trades or have excess risk, and especially in times when you know that if a certain thing happens, most likely this is going to happen also, that goes against you, well, then you try to mitigate those potential losses. So that's one way to do that. All right, Australian dollar, US dollar. Australia, as we know, is opening up their doors to the world. Being one of the most locked down countries out there. Another thing too is now we have the Olympics are over. China is going to go into Taiwan. They need plenty of their commodities, so they need Australia to start supplying things. Now, let's say we have dollar strength that comes roaring back again after. I think we're going to see a little dollar weakness over the next few sessions across the board, and then look for a potential bounce. As far as Australian dollar, US dollar, we just made a lower move low back at the end of January. We've been going sideways now for the last couple of months, but the overall trend has been bearish. Now, we may be coming out of that now, just because of their, they're opening things up. Okay, now, does that mean that Australian economy is going to come roaring back? Very doubtful, but they do produce oil. They do produce all kinds of other commodities, and considering the inflation and the pricing of commodities right now, they're sitting on a gold mine, figured, no pun intended, and they have a lot of gold too. So I would expect to see a lot of movement in the Australian markets, and you would probably see the increase in commodities, not just in production, but also in the exporting of those commodities as well. So, China is their number one purchaser as for the most part, but considering what's going on in the world, there's definitely every reason to believe that they're going to be able to capitalize more. So the Australian dollar, US dollar may have hit the bottom. I'm not calling for a bottom. You never want to do that, but let's take a look at it on the monthly and see how beat up this thing has been. We are the last day of the month. You can see this thing has been trending lower and lower and lower. However, we really bottomed out here at the beginning of 2020. We've rallied back up to here, and then now we've been trading lower since basically January of last year. So in 1 year's time, we traded lower, and now, as you can see today, what do we have here? We don't have a bullish engulfing line, but it's close. It is very close. So I would say we had the close last month was at 70.66. So we only have to go 4 or 5 pips to make a higher monthly close that also confirms a bullish engulfing line off of this low. Should that be the case, I would say that when we're going to see how the markets close today, which they're getting very close to it, if we can get just a few more pips higher, then I would expect to see a lot of follow through to the upside, and the trend for the Australian dollar, US dollar, long term is very likely to become a bull for at least, I would say, the next 3 to 12 months. Now, am I looking for an explosive rally? Not by any means. But what I am expecting is that you can, instead of us continuing to trade lower and make a low and then have a correction and slam support again, now I think we've rounded out the bottom, and we're looking to begin a big trade higher and trend higher. And it's going to be gradual. I don't see us going up to, if we take this down, let's go to the edge here. Let's go actually to the weekly here. So on the weekly, you can see that on the weekly we had a buy signal that formed already back here. We have this is called a 3 inside up buy signal right here. And if you look at it, we had this down day, we set this lower move low. Then we had this body right here, it was a positive up day, and then we were followed through again. When you have a significant low or a high, and then you are followed with a reversal of trend like that, where the first day you have, it kind of is like around the lower third of the range. Okay, now this one actually had a big bounce, but it settled right here in the lower third. But it was followed by a day where it made a higher move high on the daily basis and also settled positive on the day, as you can see, or on the week. As you can see, since then, this market has been trending higher. Now we have the questionable buy signal for the monthly. So the weekly is already confirmed that the Australian dollar has, well, at least set a short-term bottom. Now we're looking for it to be on the monthly basis and start to trend higher. So we could probably see that maybe, let's say, let's put a vertical line and make this really clear. So on a weekly basis, let's go out to at the end of June. Okay, so by the end of June, it's very likely that we could possibly be back up around this. Let's put this somewhere around this area here, right around there. So kind of where we topped out here. This would be a good area for us to gravitate to and then correct off of or build a base. Because as you can see here, here was a head and shoulder, shoulder, head and shoulder that failed and then set off the rest of this slide here. So let's see what happens. Be mindful, we haven't closed the markets yet, although they are getting close in the U.S. We have the stock market closing in 4 minutes. Right now we have this going on in the Aussie, so we're trading at 72.61. If we close, settle above 72.66, we really have a very bullish thing going on right here. Now let's look at the New Zealand dollar, US dollar. Let's go back to the daily. Now this one here also has done a very similar thing like the Australian dollar. Probably has bottomed as well. Their COVID restrictions and mandates, they're not coming out of them as quickly as Australia is. Not that Australia is coming out of them quickly either, but they were so severe, you know, that now just anything is something, right? But New Zealand also is looking to benefit from this wave that's forming right now to the upside of bullish momentum. They're a commodity country as well, and it's not that the Australian dollar and New Zealand dollar trade completely in tandem. However, they are very similar in a lot of what they do. Obviously, New Zealand is a much smaller country, but the potential for this currency to rally also is very big. So we'll be following up with these a bigger and in-depth analysis on the monthly, weekly, and daily basis. After today, we have to wait for the closes of the regular markets and kind of see how things manifest with the currencies too once they finally close and roll over to the March 1st trading session. Once they start doing that, we will definitely broadcast once again and hopefully get some nice interaction with you guys out there because we have some nice long-term trades that are setting up. So we will be not necessarily just focusing on the daily end of things in our next webinar that we're going to have. We're going to have an in-depth focus on where these markets are going to be trending for the next not just 2 to 3 sessions or 2 to 3 weeks, but at least the next 2 to 3 months, if not the next 2 to 12 months. Now, I'm not calling necessarily for excessive moves, but as far as changes in trend, this is big. Also, if you have a significant trend in the trend change, in the Australian dollar and the New Zealand dollar, okay, this is big as far as the dollar strength. Now, remember that what's going on now with this whole Ukrainian situation is going to cause a lot of stress on the dollar. Initially, we're flight to quality. Now, remember, in times like these, the Swiss, the yen, and the dollar are typically your flight to quality currencies. That's probably why you see the dollar is getting hit today. So where you're going to the Swiss and you're going to the yen. So that's giving them short-term strength, okay? However, we do know what's going on in the Ukraine is going to impact the euro. So we know that we have the split between the pound, the euro, how they're going, and whether one's going to be strong and one's not. In the longer term, we know that the euro has the weakness, and also so does the Swiss. Okay, now, is Russia going to invade Switzerland? No, I don't foresee anything like that going on. However, a poor EU economy and a suffering EU makes things really stressful on Switzerland. Okay, so that will be interesting to see how we have divergence. I wouldn't doubt that come a month or two from now that you're going to see the dollar weak to Australian dollar, New Zealand dollar, okay, very weak towards those two currencies. Also the pound. Now, but I do think you're going to see strength in the dollar versus the yen, the dollar versus the euro. These all get back to the fundamentals we've been discussing throughout this webinar. And I know some of it seems very economic based and very wordy today, but that's because we're coming to a pinnacle where we're having some big decisions to make on the long-term trends of things. And that's why we started out with talking about trends. Remember, once again, most markets trend only 30% of the time. 70% of the time, they're in sideways, choppy, hard to deal with trading markets. The currencies have slipped into a very choppy trade on a lot of these currencies over the past couple of weeks because of the Russian situation. However, the coil is winding and it's getting ready to explode. Now, as inflation continues to rear its head and we have rising interest rates on the horizon, which we know, since we've discussed this now, that it will cause inflation, okay? So the dollar is going to really start to erode once again on that, especially because the more that we put these sanctions on Russia are totally pointless. They're actually paying Russia now to fund their war through these sanctions. And the biggest thing is that we're buying their oil as well, So, and the more we buy their oil, the more that also diminishes the weight of the dollar, okay? And also, it depends on how long oil is going to continue to be traded as the petrodollar. If that starts to fumble, which it already is with the euro, of course the euro is not the problem right now, but if it starts to get based in lots of other currencies, especially, God forbid, crypto, is that going to happen? It could, it's a definite possibility. And as that does occur, what does that do to the value of the dollar? Well, that diminishes. So we're going to have some interesting trends setting up. We're going to be bulls on some trends for the dollar, and we're going to be bears on other trends when it comes to different currency crosses. And we'll get to those over the next few sessions. So please be mindful and paying attention to that. All right, so we're going to talk about the US dollar Canada and then get into some cryptocurrencies. So US dollar Canada, as you can see, has been choppy and very negative the past two sessions. It's very reflective of what's going on in the dollar. Now, it's been sideways for months now, as you can see, and especially the last month. Is this going to stay that way? Well, Canada is insane with what's been going on up there besides the truckers and whatever. I mean, their leadership with Trudeau, the communist, is crazy. Enacting the War Act and then finally repealing because of the pressures. I guess when they realized that there was going to be there was already a run on their banks, it was only going to continue, that all of a sudden they had to be like, oh, wait a minute, we've really pushed our politics too far in this country. But the biggest thing is that Canada and the U.S., for some reason, even though we have two administrations that seem to be on the same point of view, they can't get along, which is weird. So it's hard to capture what's going on with the Canadian dollar. Let's look at the monthly. As you can see, we bottomed out here back in June of 21 last summer and had a nice bullish engulfing line. We've had this correction higher that has stabilized over the last 3 months as kind of a sideways trade. But even if you look at it, it's been in the bulk of the trading, it's been between $1.29 and $1.2250 for the last several months. Will it break out? Eventually it will. I think that we are poised for a breakout. Originally, I was going to say, and I was viewing this as a potential US dollar, Canadian dollar bull. However, odds are that ain't happening. With oil where it's at and with the ineptitude of the two administrations, I don't see anything happening anytime soon between these two countries, ours and Canada, meaning respectively. But I do think that you are going to see, as oil continues to rise, the interest rate factor should give strength to the dollar, so I don't think you're going to see a major hammering to the downside of support because of that. But as long as oil remains firm, and especially if it really starts to get up towards 110, 115, 120. I mean, I had a $100 price tag a year ago. It took us just over a month and a half extra to get to where it was at. Now that we've already hit it, will it continue? Oh, absolutely, it's going to continue. We're going to see. We may actually see $200 a barrel of oil within the next year and a half, if not the next year. The old high of around, what was it, I think 157 or something like that in the futures contract. Is definitely in jeopardy, and we are targeting that in a big way. For those of you that don't remember the Bush era during the early 2000s and how much it was at the gas price pump, and that was before they levied all these extra state and federal taxes on gas. So if you think that paying now over $4 in Chicagoland, let alone over $6 in California, is expensive, wait until oil gets to 150. So we're going to be paying everywhere, no matter what. The national average is going to be around $6.50 to $7 a gallon for gas, and most likely within the next 6 to 8 months, if not even sooner. So not to spike you or freak you out there, but Canada's going to ride that trade because guess what? They have no problem, even though they have this green thumping, that they say what they're doing on carbon emissions and whatever. They're a commodity country, and one of the biggest things they export is oil. So guess what they're not doing? They're not curbing their production of oil. So especially at these prices. So that alone will give strength to the U.S. dollar, or give strength to the Canadian dollar, and make the bearish case scenario for the U.S. dollar Canada hold up. All right, let's take a look at Bitcoin here. BTCUSD. Interesting stuff. Look at how it is up today. Look at that. All the bulls are like, see, told you, it's going to the moon. It's going to $1 million every time you get a little rally. Well, interestingly enough, we did make this low back here in January. We made a lower move high here. We made a higher move low just a few sessions back here. Are we bullish? Yeah, I don't know about that. We don't want to try and call a bottom, right? Bottom picking and top picking is something only the foolish try to do. However, we can acknowledge the fact that we have a short-term neutral to bullish correction forming here. So the key thing to pay attention to now is this last significant low from the other day, and look for a challenge of the highs from the middle of February up here. If we get above 45,000, which we're not too far away from, then I would expect to see follow through up towards 50 to 52,000. Use caution on this one. It could be very well be an inflated rally that it will be very short-lived. Okay, meaning that we're going to pop up and we're going to slide right back down. There's all kinds of scenarios for that. We're not going to even get into that, but technically we do have a breakout to the upside. We had established this higher move low, and off this higher move low we made a lower move high, and then a higher, because it's lower move high from here. But if we look for the trend to the upside, here we have the low, we have a high, we have a higher move low, and a higher move high. So short-term trend is definitely bullish. Medium-term trend, though, we had a lower move high into a higher move low. It sets us up for sideways. So unless we breach 45,780 here and make extended higher move highs, I would expect this to be a choppy trade between 34,000 and 45,000, this 11,000, 1150 range, as far as how far this market can go. So is it a buy dip scenario? Short term, yes. Is it a sell rally scenario? Not really. I would use caution with that, but I would also keep your stops tight. I would be very mindful of the fact that this can turn on a dime, and most likely will. We're not going to get into all the arguments of whether it has a long-term or a short-term significant value, but as far as what's going on in the world, and that's why I mentioned this when I was talking about oil, cryptocurrencies may start to come into play when it comes to getting around the sanctions and a whole bunch of other things, because it's the money trail. So, and if you think that the Russians only need to use banks, well, they can use crypto as well, just like the countries that deal with Russia, and even, the ones that say that they're not for what's going on in the Ukraine, but they're still doing business with Russia, and this whole thing that, Biden and the EU can say, and the NATO countries can say that anyone that does any business with Russia, we will have sanctions put on you as well. Well, yeah, we have to use caution with that one, because we are on the wrong side of history here. And I am not a Putin fan. I don't have any respect or like what's going on in the Ukraine. However, we stoked the bear. Had we not violated the deals with Russia for the last 30 years, we would at least be in a situation where if we hadn't done the violating first and poked the bear, if Putin was doing what he is doing now occurred without us doing those things, well, then we would be just to increase NATO forces, put in sanctions, etc., etc., etc. We should have done sanctions ahead of time, been proactive, not reactive. This is all about appeasement. We are paying Putin for this war. Anyone that says any different doesn't see what's going on and doesn't pay attention to where the money is going and coming from. And guess what? Yes, the United States is funding part of this war because we're buying oil every single day since this has happened from Russia. So until Joey Biden decides to stop buying oil from a foreign country that we are now sanctioning, this is not going to change. However, expect cryptocurrencies to be a medium for a lot of deals to get done with Russia over the next couple of months. And hopefully this thing only lasts a couple of months. A couple of weeks at least it will. I don't see it dying down anytime soon. And actually, to be quite honest with you, I think we've gotten into something that this is only going to continue to build and build and build and build and build. The Russian bear is not going to stop now. It's just not happening. Especially because they're making money off of it. I mean, we're making money off of the war complex that's in our country, but we're losing money to the commodities. Russia's a commodity country, and they also sell arms too. So yeah, they're doing really, really well when it comes to this. So once again, I'm not a Putin fan, but we are playing into his hand, that is for sure. He is prepared for everything that we are doing right now, and what we are doing is not helping anything. So, but time will tell, and maybe all these things will work, and you'll be like, 2 weeks from now, I'll be like, see, Teddy, the sanctions work, Russia backed off, and blah, 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 blah. Well, I certainly hope that I am wrong. I certainly do. I'll be the first one to admit it if it does happen. I won't be, and I told you so after it does. I'll just remind you that common sense, once again, was why these things occurred. So Ethereum, we have a nice little situation here, similar to Bitcoin. It's higher on the day. Looks like it wants to break out to the upside. Interesting enough, when it did bottom here, it did have a short-term neutral to buy signal. Neutral to bullish buy signal. At the time, it's definitely more neutral. It still remains neutral to me. I would key off of this last swing low. A failure from here obviously means the bear trend is back in place and is definitely solid. But I would view this current upside trading today. I mean, if you look at the last 5 sessions, we are at all positive days except for yesterday. Yesterday looked like a profit-taking sell-off. We've reversed gears today, and I would expect to see follow-through for the next couple of sessions. The key is, can we breach this $3,200 area? If we get above $3,200, well, I'll be happy because I own Ethereum, just like a lot of you probably do. But it's really good odds that if we do breach this area, that we could get up to $3,600, $3,800. I would use caution, though, thinking that we're just going to keep on rallying, rallying, rallying. So if we take this low, let's use this and this. So remember I said $3,800? Well, that was just eyeballing it. Now we use the Fibonacci, and I would expect it to come somewhere into this area. So now it's bullish if we take out this high, obviously, because we'll have made a higher move low and made a higher move high once we breach these two little levels here and trade up into here. But that doesn't mean it's not just a corrective rally for a month and a half that then fails and hits back on support. So use caution as far as having any type of longer-term bullish outlook for Ethereum. Right now, short term, as long as we're above $2,300, it's very likely that we're going to challenge 3,200 up to 3,482. Once we get up near this $3,800 area, I think it's going to run out of gas. I could be totally wrong. If it becomes a runaway bull, obviously that means that the whole crypto sector is bullish. Any of you that have watched me before and have listened to me know that I typically refer to Bitcoin as very similar to the dollar index, even though it's not. But there is no index for cryptos. But Bitcoin is kind of the gauge for the whole overall sector, because when Bitcoin has a huge rally, it seems to lift predominantly almost all cryptocurrencies. And whenever Bitcoin has a huge sell-off, obviously we know that it definitely impacts, for the most part, all the cryptocurrencies to the downside. Ethereum is one of the ones I like, for a lot of other fundamental reasons. This one here has a good value where it's at, and I can see it shooting back up to that $3,800. Once you get towards that $3,800, though, you have the realistic thing is that the technology starts to get more and more expensive. The more expensive technology is, the less likely it is to be used. I know people say, well, it has nothing to do with how Ethereum works. Well, yeah, it kind of does. So that's why Dogecoin has no long-term value. The technology is not embraceable. The only people that say that they would love to see Dogecoin technology continue into the future are all the people that are caught long and can't get in there. It's just they're just losing money. They're hoping that there'll be another pet rock wave of fools, greater fools, to drive that market up so they can cash out. which may happen. We'll see. So anyhow, Ethereum US dollar is poised for a rally. Now let's take a look at, let's see, XMR US dollar. All right, so Monero, big upside day today, which I like this one. This is pretty interesting. Remember how we looked at Bitcoin and Ethereum? We have a little divergence here. This is a good buy signal indicator for Monero. This one here made a lower move low in the longer term basis just a few sessions ago, where Bitcoin and Ethereum, which we just looked at, made a higher move low. Does that mean that those other currencies are that's going to change anything? No, but as far as the sector and as far as a breakout to the upside, I would expect, especially off of this low here, this here, if you look at this low here, this has got a little tiny body and a big extended leg down here. If you read my book, High Probable Japanese Candlestick Patterns, in the first couple chapters, you would know what kind of a signal this is. And it does it is a significant signal in the sense that it does typically cause a pause in the market, not necessarily a total reversal of fortune for the market, but it usually puts the brakes and locks in support for at least a few sessions to even upwards of a couple of weeks, depending on how significant the move was. Now this market's been trending lower this whole time in this area. Now I have 160, 180 as a very good buy value area for Monero. So now we're below it. So this is a really good area as far as value. Now I think that it could rally back up to 220 to 260. Anything above 220, it starts to get expensive as far as the technology is concerned. So then it becomes speculative. It obviously has already traded higher, but I would look for selling to come in definitely once you cross the 240, 260 barrier, and for sure once you get above 300. I don't think you're going to see fresh buying coming in at those levels. I think if anything, you'll see profit taking, and not a strength of buying momentum, but rather a selling into strength that will occur because of it's just profit taking. And once that profit taking is occurred, there's not enough driving force to sustain the rally. So I would use caution no matter what as far as how high you want this to go. But think about this: if you're in at 160, 180 here, and you go up to $260, $300, well, come on now, that's a big return on that's a big bang for your buck. You should be happy with that kind of a trade setup. And the nice thing is that where it's at right now, if you don't own it, your risk here is down around these lows. It's not. This is a very good base. So unless the whole sector of cryptocurrencies takes a big dive, it's unlikely that Monero is going to continue to ride support. It's more likely that Monero is bottomed and is rounding a bottom out and is looking to trade higher and establish a neutral to higher trending grind of a trade, kind of like what we were looking at in some of the regular Forex currency markets. All right, speaking of pet rocks, we have the Doge, which made a lower move low, just that's been trending lower, obviously, like all the other cryptocurrencies. It made that low around the same time. Like Monero, it made a lower move low, not a higher move low. This trend is bearish. Any rally is a rally to sell. I don't think that this is a buying opportunity. I think what you're setting yourself up to is that if you have Dogecoin, that you can get a little bounce and maybe sell it up around the 14, 15 cent level. Is this thing going to get above 16 cents? I doubt it. Could it? Absolutely. I mean, this thing could go to $1, you know. So, but I would be very leery of any uptick in this market. Let's take a look at the monthly, by the way, for this one. It's pretty interesting. So as you can see, the high was, what, 74 cents. And ever since it's made that high, it's done nothing but trend lower. I mean, this market even opened up, where was it at? It was at 32 cents. We're at 12 cents. So the viability of this technology, it doesn't exist, you know, as far as, now, I know there's some people that are like, you know what, it's so cheap, I might as well throw $100 at it, you know, and see what happens. And I guess if you want to waste your money, it's up to you. Not that it wouldn't work, but this is obviously a bear market. It's trending lower. And let's take a look at this one versus, let's say, MRUS dollar. So if you look at Monero, like we said there, it's setting a nice little bottom. You can see 500, 450 seems to definitely be historically a big sell-off area. But we're in a good basing area. This is a good area for growth. You know, once again, getting back up towards that 3,350. This is a viable trade. This is a viable cryptocurrency. So please, when it comes to Dogecoin and a lot of these other meme type things that just come up and they have whatever technology supposedly is going to be great in the future, then whatever is not going to be embraced. Only so many of these things you can you and I can create we can create a cryptocurrency every single day if we wanted to. Doesn't mean it's going to have any value, you know. So I would use caution with these and notice how these are trending. These are much more solid. They're much more realistic, and they're more. It's not that they're just more mainstream, but obviously they have the viability, you know. So, and these are things I think you should really pay attention to, and we'll see where these go. We're going to keep on monitoring them, but use caution when it comes to the cryptocurrencies because you all know that just the spread for cryptocurrencies, whether you're in the cash or even if you trade the futures now, the derivatives, there's a big spread getting in and out, you know, in the actual markets. And then when you have the derivatives, financial derivatives, the liquidity factor is rather weak, and they're also very expensive. So that to trade the Bitcoin futures, my background is futures trading and derivatives trading. The margins are absurd. You know, I mean, they're just absolutely absurd, but for a reason, and they need to be that way. So why don't we end where we started? We'll go back to the Euro US dollar. It's set on a monthly. We don't need that. Let's look at the daily. All right, so on the daily, you can see not much has changed. It's now 320. So remember, we have some signals that we're looking for, and we will see how these things pan out. We don't have any questions on the chat boards, but if you haven't already, please share and like our video on YouTube and Twitch. And if you haven't subscribed to our channel, please do so as well. And remember the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in Kindle and paperback versions. And I'm Teddy Keckstedt from Forex Trading Unlocked. And you can check out our website also, www.forex-trading-unlocked.com. And we will see you guys soon. Thank you very much for your time. And